Hi, welcome back. You'd think after my last fiasco, investing in Vale and losing a ton of money, that I'd avoid stocks on the dark side, right? But it's not going to happen. I know you have to learn your lessons from your past mistakes, but you cannot be gun shy and avoid investing in entire segments of the market just because you've lost before. So today I'm going to pick a different company in the dark side, Volkswagen. But this time you can argue that the damage, rather than being inflicted from outside, was self-inflicted. Volkswagen is suffering through a month of damage caused by the revelation that it deceived the EPA on its emission tests. So let's set the table. In 2014, Volkswagen was the largest automobile company in the world in terms of dollar revenues or euro revenues. It is the second largest company in terms of number of cars sold to Toyota. So clearly, Volkswagen has climbed the ranks to become one of the biggest automobile companies in the world. Within the US though, Volkswagen has not been as successful. And maybe that was the impetus for the cheating. Volkswagen in the US is in the low single digits, even if you count Audi and the other makes that fall under the Volkswagen umbrella. So that's where Volkswagen is, and the numbers reveal how much Volkswagen has grown over the last 15 years. If you look at its revenues have climbed, and its operating margins are not bad. I mean, they're not incredibly good, but they're not bad. They've climbed to about 6% in 2014. The average operating margin over the last 15 years at Volkswagen has been about 4.21%. So you could argue that maybe the company was in a high, both in terms of revenues and operating income, when the damage struck. Here's what the damage is. Volkswagen, for the last few years, we don't know how many years, has been fooling the EPA. The way it's been fooling the EPA is it's been programming the computers on its diesel cars, at least that's the way the story goes, that the cars know when they're being tested by the EPA for emission controls. And what the cars do, the computers in the cars do, is switch the car to safe mode, where they release a lot fewer pollutants into the air. By some estimates, about 1/40th of what they actually release when they're being driven. So for years, it's been fooling the EPA and being able to get away, therefore, with being able to sell cars that otherwise couldn't have been sold with the kind of emissions they had. That scandal, of course, like all scandals do, has come to the surface, partly because of EPA pressure. Now, it's not clear whether Volkswagen has been doing the same thing with European governments, and that probably will come out in the next few months as well. So the question is, what happens next? There are three potential costs that come right out of this emissions cheating. The first is that it's going to expose Volkswagen to fines. Volkswagen has already set aside $7.3 billion to cover these fines, but it might not be enough. The maximum fines the EPA can impose in this case can amount to about $18 billion. Now, the EPA almost never goes to the maximum, but those are the maximum fines. So that's the first layer of damage, is Volkswagen is going to be exposed to fines, not just from the US, but perhaps from some European governments as well. The second potential layer of damage arises from the fact that Volkswagen will now have to recall 11 million cars. That'll put it up as perhaps the largest recall in automobile history, because I think Toyota recalled 9 million cars for their gas pedals getting stuck between 2009 and 2012. But this will be 11 million cars, and that's going to cost a ton of money. In addition, the fact that Volkswagen has been cooking the books, so to speak, cheating, has opened them up to lawsuits. Lawsuits from whom? From the people who bought their cars, from shareholders who might feel that they've been deceived by the company, from people who've lent money to the company, from dealers. And the lawyers are already lining up, ready to go both in the US and in Europe. There's a third layer of costs. None of this news is good news. I mean, if you look at the stories that are about Volkswagen, they're almost all painting the company as a bad company. And that might start affecting whether people buy its cars, its revenues and operating income. We don't know how large the damage will be. We don't know whether somebody would plan to buy a Volkswagen Jetta, might now buy a Ford Focus or a BMW instead. But those are costs that are all going to start to show up in the next few months. Now, there are some investors who might argue that until we know what those costs are, we need to avoid investing in Volkswagen. I think that's a wrong tack, and here's why. The market is already building in a cost into its market capitalization. And if you can jump on this process early enough and make your best judgment of the costs, and it's different from the market judgment, maybe there's a potential for making money. So let's look at something we can use to kind of estimate what these costs will be. And in this case, I'm going to go back to the Toyota the gas pedal scandal of about 3 years ago and look at what these costs look like for Toyota when it was all said and done. So if you look at the Toyota experience, basically there are about 9 million cars that were affected by gas pedals getting stuck. In the case of Toyota, you could argue that that was a more serious scandal than the Volkswagen scandal, at least in terms of lives lost. So dozens of lives presumably were lost because those gas pedals getting stuck, the cars accelerating, hitting side walls or other cars in the process. If you look at the Toyota experience, here's how first the EPA fine on Toyota for the damage created was about 1.2 billion. If you add on the lawsuits and the recalls, that was an extra 1.1 billion, mostly from the cost from the recalls, but there were also some shareholder lawsuits that played out. And that cost was relatively small, 25.5 million, but that doesn't account for the legal costs that Toyota probably had to face to counter these lawsuits. Toyota did report some lost sales, and if you look at the 3 years after this gas pedal scandal, from 2010 through 2012, Toyota lost about 7% of its revenues, and those revenues stayed low for about 3 years before bouncing back in 2013. So at least for Toyota, all three layers showed up as real costs. The question is whether we can extrapolate from this to the Volkswagen experience. It will be more cars, 11 million. It will be the fact that people haven't died as a consequence might reduce the impact, but the costs, because they try to deceive the EPA, the fines might be much larger, and we don't know what the lost sales will be. But that's the task we face as investors, to estimate what that cost will be. The market, in a sense, has already spoken and said what it thinks about the Volkswagen fiasco. A month ago, on August 31st, Volkswagen's market cap was 82 billion euros. A month later, and purely the result of the scandal, because there has been no other information about Volkswagen that would suggest a big drop in market cap, the market cap for Volkswagen is now 48 billion. The market has effectively knocked off $34 billion in market capitalization as a result of this scandal. So here's the question we face. Is that drop in market capitalization too much, just right, or too little? I call this the Goldilocks test. If it's too much, we should be buying Volkswagen. The market has overreacted. If it's just right, we should leave it alone. And if it's too little, then maybe we should be selling short on Volkswagen. So here's how I'm going to try to answer that question. I'm going to start off with the presumption that on August 31st of 2015, the stock was correctly priced. And here's why I'm going to do it. I want to isolate the effect of just the scandal. And I don't want to bring in any preconceptions I had about Volkswagen being cheap or expensive. So I'm going to start out with that presumption that Volkswagen was correctly priced at 82 billion euros on August 31st. I'm going to use that 82 billion euros to extract the operating income that Volkswagen must be having. In other words, impute whatever the market was anticipating as operating income. Then I'm going to use that operating income post-scandal to revalue the company with the cost of the scandal built in and try to address the question, is the cost of the scandal $34 billion, less than $34 billion, or more than $34 billion? So let me go back to August 31st of 2015. I took the $82 billion market cap that Volkswagen had, used it to derive an enterprise value of $101 billion in August 31st of 2015. Remember what I said. I'm going to assume that this was the correct enterprise value. So in a sense, I've got to use that enterprise value to extract what the market was anticipating as operating income of Volkswagen. The reason it's relatively simple here is Volkswagen is a mature company in a mature business. It's the biggest automobile company, and the auto business is not a fast growth business. So in my story, Volkswagen is a stable growth company. It's a mature company. Mature in what sense? Going forward, I'd expect Volkswagen to grow at the same rate as the economy. And I've assumed, because I'm doing my valuation in euros, that that growth rate is going to be a really low number, 0.6%. So essentially, I'm assuming that going forward, Volkswagen will grow 0.6% a year in perpetuity. Now, in order to reinvest to get this growth, I had to make an assumption about what kind of return on capital Volkswagen would earn. Here again, I've been conservative. In my story, Volkswagen earns its cost of capital. It's very difficult to earn more than your cost of capital over long periods in the automobile business. I estimated cost of capital, again in euros, based on where Volkswagen operates. That drives its equity risk premium, the business it's in. And finally, I brought in the debt and the cost of debt. And based on Volkswagen's current rating, the cost of debt is relatively low. The overall cost of capital I get for Volkswagen is 5.87%. And in effect, I have all the inputs in this valuation that I need except for the operating income. I solve for the operating income and end up with 8,423 million euros. You see, what does that mean? Given Volkswagen's market cap on August 31st of 2015, that is what I would anticipate the operating income to be. That's what I'm going to use as my base number post-scandal. Now let's take a look at how the scandal will play out, and I'm going to make a very conservative estimate of what it will cost me. Conservative in what sense? I'm going to make the largest possible estimates I can for the cost, so I get a conservative estimate of value. So let's start with the fines. I will assume that the EPA will levy its maximum fine, $18 billion, which works out to 16.1 billion euros. I will also assume that other European governments will feel the urge to pile on and add another 10 billion euros in fines. So it's about 26.1 billion euros in fines. I will also assume that the recall is going to cost 1.6 billion euros. Remember, Toyota's recall cost $1.1 billion. So I'm essentially assuming a big markup on the $1.1 billion, almost a 65% markup based in euro terms, to come up with a $1.6 billion estimate for recalling 11 million cars and fixing them. I'm also going to assume that the shareholder suits and the other lawsuits will play out, and that the maximum fine that can be imposed on them will be $2.4 billion. How did I come up with the $2.4 billion? That is actually the largest judgment I could find in a shareholder lawsuit in the US. I'm assuming that Volkswagen is going to be hit with the largest possible judgment. To make things even more conservative, the fines, the legal fees, and the recall costs are usually tax deductible, but I'm going to assume that only half the costs are tax deductible because the governments are going to step in and perhaps restrict the deduction of these costs. Finally, I'm going to assume a 20% drop in operating income, and that drop will last for 5 years. Remember, for Toyota, the drop lasted only 3 years. So it's a pretty substantial cost, and the present value of those lost sales works out about 5 billion euros. So about 26 billion euros in fines, about 4 billion euros in recall costs and legal judgments, and another 5 billion in lost sales. So I brought those all in, and I revalued Volkswagen with those numbers built in. And guess what? The value drops. The value drops to about 52 billion euros. Still about 8% higher than the market cap of 48 billion. See, that's not very much. It's less than my margin of safety. But remember, this is a very conservative valuation. In fact, if you look at the what ifs I've asked there is one scenario which is far worse, which is not only do you get fined the maximum, but you're not allowed to deduct any of it, and you lose sales forever, not just for 5 years. I don't think that's very likely, but if that happened, the bottom's going to fall out at the stock. But if you look at the other scenarios, almost all of them deliver good news. In what sense? The values that I get are much higher than 52 billion. In fact, the value could be as high as 70 or 75 billion if the scenarios close to what happened to Toyota play out at Volkswagen. So here's the end game. I am going to invest in Volkswagen because I think the market has overreacted. I'm going to do this with open eyes. In fact, with Volkswagen, you get a choice of buying ordinary shares or preferred shares. Those shares used to trade at roughly the same price on August 31st of 2015. The preferred shares have dropped more than the common shares. So right now, the common shares trade an 8% premium. Now, from a bargain hunter standpoint, I'm drawn to the preferred shares because they've dropped more. But this is a company where control is going to increasingly become an issue, and I'd like to have some control in the game, and having the ordinary shares gives me a vote in who runs the company. So notwithstanding the higher price, I'm going to buy shares, the ordinary shares, and I'm going to do it recognizing that the next few months, perhaps even the next couple of years, are going to be rocky. Because scandals have afterlives. You're going to find out more things about Volkswagen, and they're going to be blown out of proportion. So be ready for a lot. I'm ready. No, I shouldn't be telling you to be ready because you're not buying the stock yet. No, but I'm ready for a lot of bumps along the road. And at the end of the game, I think the odds are still in my favor. Now, as I said, this is not, I have no desire or intention to talk you into buying the stock. In fact, that's a very unhealthy thing to do. But I have the spreadsheet ready for you to download. You can download it. You can put in your own estimates of the cost and come to your own judgment.
And if you decide, like me, that Volkswagen is cheap, great. If you decide that Volkswagen is expensive, that's fine too. It takes all kinds to make the investing world. Thank you very much for listening.